trade going to be coming into view. Now obviously if it's starting to increase on the way up, it's more likely to be a sell on the way back down. If it starts to increase on the way back down, it's more likely to be a buy on the way up. So the increase was actually on the rally phase here. If the increase is on the rally phase, you see that aggregation, you know that's going to be a sell trade. We called that sell, by the way, live in the room at the time. And it gave a perfect example of a perfect top edge sell. So if anybody took it, you would have been now marking off these areas here as possible locations for short trades. It's that easy. Speculate guys, hope you're good this morning. Data from the US is obviously a little bit skinny just now. We do have a, well, you tell me, what do we have? What do we have, guys? In terms of the floor traders, it's bullish rotation, correct? It's actually neutral bullish rotation. Neutral bullish rotation. So if it's neutral bullish rotation, have we had neutral bullish rotation so far into the US Open? Pretty much, right? Pretty much. We've had bullish rotation at the Cash Open. So that's not a surprise. You would obviously understand that. You've probably already taken that. You've probably already done what you need to be doing to capture that little equity bid, and you're already making some nice monies. Did we get a nice bullish rotation from the value line, yes or no? Yes, we did. We actually got a very bullish rotation from the values, didn't we? We got a very bullish rotation from the values, so they ran stops. Where did they run stops into, guys? Where did they run stops into? Is there anybody that can see an order block on this chart here that we could project onto the right-hand side, yes or no? If you can see an order block, where is the order block? What price? Look at your own 1 minute charts, guys. What have you got as an order block? Where have you got an order block on your charts? Nobody? An order block would be this order block here, wouldn't it? 95.5, 93 3/4, yes? 95.5 to 93 3/4. That would be an order block. Does everybody agree with that? It's got that very toxic drive higher, which makes it a strong order block area. We're now in the mood to buy into this area if we get an opportunity. We've also got liquidity building at 99s, because there's a liquidity pop just there, yes? We've got liquidity at 99s. We've got a small wholesale price at 95s, which gives us a little bit of liquidity, 95s. So now we've got a couple of ideas. So coming into the US Cash Open, we're obviously thinking about these areas for possible buy trades, yes? So there's an order block area. There's the liquidity area. You see the massive rip higher in value. And you're starting to think to yourself, if I could start bidding into these breaks lower, I could make a lot of money, right? So the first break lower was a nice buyable opportunity. The second break lower was just a better buying opportunity because it was into the bullish order block. What happened next? We got a reasonable response, and then we came back into the order block a third time. Came back into the order block a third time. And we simply just bought again. The value is just as good as it was, if not slightly better. So we just bought it again, and we've had 3 trades into the Cash Open, all buys, and we've had a very, very nice upside surprise for these trades. 95, high prints of 0.7, so over $500 a contract, $600 a contract, and you've taken 3 trades into that, yes? All very straightforward, all in line with the value lines, all in line with the value lines, everything stacks up. We are rocking and rolling on those 3 trade opportunities. Absolutely correct, yeah. Volatility, however, has came out from the top edges, so you're not going to be hanging around for this to break north out of these areas. The ABCs have kind of gone a little bit flat. The sentiment seems to be relatively bullish, but obviously volatility is a little bit better for us than sentiment, because there are reasons why sometimes sentiment can work against us in an environment of interest rates. So I like to see that volatility analysis with an aggregate candle just here. Why is that? That's obviously a very, very big candle. But with a candle that size, you're always going to take profits anyway, regardless of where it is and when it is. And obviously with the value dropping on your volatilities, a drop back down again would be expected. Now, I'm not going to be selling this. I can't be selling it. Sentiment is still bullish. So I don't want to be selling it. So I want to be trying to work back into buys. Now, obviously, this little bit of liquidity here is starting to build. So that might give us a nice liquidity sweep, and we can start picking up the long again into the next phase. And that's what we're kind of thinking about just now, is seeing if we can get another long out of these bottom edges. If we break this level here, obviously has a lot of stops attached to it because it is the day low now. So we get an extra liquidity point for running 40.95. And that's obviously something that we're aware of. We get an extra liquidity point if we can run the 40.95s. And that would be a better trade for us, but we might never get there. So I'm just watching some leans. I'm going to take some scalp buy trades to capture the buy trade if it goes. And then we just take the scalp buys against any leans. And you can see it has just gone nicely away from that price level. You can see we've just had a nice profit. And that's another one in your bank account. How do you get that trade on? Well, we did it yesterday, didn't we? Because Yuko asked the question. We were looking at it from the order flow point of view. Every candle has a lean. Every candle has a way of getting into the trade. Every candle has an opportunity. Every candle has an opportunity to get that trade done, hasn't it? So our job is to look into those candles and try and figure out where that opportunity is at. That's our job. That's what we do for a living at the moment, isn't it? That's what we do for a living as a trader in the retail space. You find the trade. Now take a look at the 5-second chart and see if you could spot the trade narrative. Well, there's the trade narrative there, look. So you can see that we get the very, very, very low. Remember we talked about the sellers being at the top of a candle. Look at that candle at 14, 15, 50 seconds. You see that the volume is now jammed at the bottom of that candle, exactly where we were looking. Do you see that the deltas have been drying up and then we get a surge of deltas getting absorbed? You're not buying that absorption. You're buying a reversal of that absorption. You're buying if the price goes above that absorption. You understand? So you're not having to take the buy trade whilst that amount of selling's coming in. You take the buy trade once you've taken advantage of the absorption from those sellers. Then you jump on board and you're now in a buy trade. You're now in a buy trade at that stage. And what price did you get? Well, you can see what price you would have got. You'd have got 97.5 on the trade, guys. 97.5 on the trade. Did you make any money on 97.5? Damn tootin' right you did. It's a scalp. I mean, we know where we want to go, but do we have to wait for that? Well, that's up to you. That's a decision you make. That's a decision you make if you want to wait for the break to the downside, which we thought was probably going to come, which it has now came. And you could have obviously have taken a price there at 97.5, and we got all the way up to 3.25, guys. We got all the way up to 3.25. That's a good trade. That's 6 points. That's $300. That's a wonderful opportunity. So we start watching again. We've just done exactly what we said we thought was going to happen. We've ran the big liquidities into the bottom edges, and you start looking for that lean on your order flow all over again, and you bid against that lean. Life isn't that difficult, guys. You've just got to say, right, I want to find a buy. Let me now find the buy trade. Let me now find the absorption. Let me find the opportunity to buy into this. And then you simply execute. The lean, if anybody was looking, there was a big volume coming in around about that 92 print. So you'd have probably paid 92.25 for your trade. 92.25 for that trade there. Guess what happened? You got up to a price of 94.25. 8 ticks, $100, stops at break even. And yes, you've been scratched out. What are you going to do? You're going to try it again. You're simply going to try it again. You're obviously aware of this. Now, one thing I would warn you about is that we haven't looked at that volatility. Remember, the reason why we weren't getting too busy buying top edges was because the volatility was against the buy. The volatility was very much against the buy. So take a look at your volatilities to check to see what your volatility narrative is showing you. Because if you haven't done that, you'll be missing the fact that this volatility was incredibly bearish. Incredibly bearish. So when you look at that narrative, you can see that you would never have taken this trade based on the volatility. And then because of that, you would never have taken that sell, that buy trade. You'd have been looking more at this top line for a sell. Do you see it? So that's why you can't oversimplify your charts, because if you oversimplify your charts, you're going to come in too soon in areas. Now that means that these buys were brilliant, but that sell was good because there's a sell side order block up here, correct? There's a sell side order block there. There's a bearish order block at that price. And obviously based on that bearish order block, you can see that you ran some liquidity into that bearish order block by running the stops at that price there. So you can see that you could have easily have got that short play. You would never have bought this buy trade with the volatility, and you'd even be a very reluctant buyer of bottom edges. So you just pull your prices away and you wait for something better to line up. That's why you can't oversimplify your charts, because you miss key pieces of information. These buys were great. There was a possible sell in here, but I think it was pretty rank rotten, to be honest. If it got probably a price of 10.5, I think it would have been a far better sell because we'd have cleared the top line altogether. But I think with the sentiment bullish, I think the possibility of selling that were pretty close to zero, correct? So let's take a look at that sentiment again. With the sentiment as bullish as that, the chances of me selling that are pretty close to zero. I'm not going to be interested. So that's not a sell for me. So on that basis, the only trades I've taken so far are these 3 buy trades, and that's it. Does everybody agree that they all line up with sentiment? They all line up with volatility. They all agree with the ABCs. They all agree with the bullish neutral rotations. In fact, they all agree with everything, don't they? They all agree with everything. They're the only 3 trades that agree with everything. They're the only 3 trades that have all of your lines in perfect harmony. Everything else, you're reducing your probability. Does that mean you can't take them? Of course it doesn't mean you can't take them, but you realize and recognize that you're reducing your probability to take them. So that's your choice. Do you want to take lower probability trades, or do you want to take the high probability trades? Personally, I want to take the high probability trade outcomes. And that's why the only trades I've had so far this morning have been these 3 buys. There's just simply been these 3 buy trade narratives here. And that's what we're kind of thinking into at the present moment. I'm not interested in anything else. I'm watching for a bit of value to develop that gives me confidence that we have that confluence in line of all the various different competing forces that are going to be buying and selling against these things. We can look at what the Divi Kings are doing. You can see the Divi Kings in terms of their narrative, very bullish indeed. So I can't sell into a Divi King narrative, can we? Why would you sell into a Divi King narrative, guys? It's a bad rotation. So I would rather be long than short, that's for sure. I just can't buy it when the volatility is dropping like this. I can't buy it when the volatility is as bearish as this. And that just means that if you're going to buy it, you've got to wait for momentum. You can see you got a momentum shift here, and it's obviously exploded north as you would have expected it to do, because you've got the momentum behind you and you've got the value behind you as well. It's not straightforward, guys, but it is straightforward if you just put the stuff together. It's not straightforward if you just look at it as one line, but it becomes straightforward where you can simply deny one side of the markets. And if you can't deny one side of the markets, well, that's it. That's your answer. You say to yourself, well, I can't eliminate one side of the markets. I'm just not going to trade it. Does that make sense to everybody? It's a secret to trading, guys. If you can't eliminate one side of the market, why would you buy or sell? Why would you ever take a deal if you can't eliminate one side? It means that you're not being able to put one of the drivers which could cause you a stop out to stop you out. So if you can't eliminate that driver, you're taking a gamble. And I'm afraid, guys, I'm not into gambling. I'm into market making. I'm into dealing. I'm not into gambling. Gamblers do not have a great record of success in the marketplace. Is there a time for gambling? Sure. It's when you're bored, rigid, and you just want to have a bit of fun in the markets, doing a bit of scalping to learn some techniques. Then there's absolutely no reason why you can't take a bit of fun and go for a couple of punts, guys. No reason. So Pelosi's now in Taiwan's air defense zone, apparently. Let's see if she gets shot down. Just watch the markets, guys. If there's any activity at all that could cause a market dent, if you like, cause quite a sizable dent. We said this morning it's high probability that it's just a load of noise and nothing develops from it. That's what the expected outcome is. That's what everybody's expected outcome would be with this type of narrative. But you never know. You never know. See, the storyline in equities has turned out to be 100% accurate. There is no side to eliminate. So because of that, equities have basically just rotated during that period. You see that? So that gives you an idea about getting that bigger macro picture, clear in your own mind about what's going on. Jolts, by the way, 10.7. Prior was 11.25. Forecast was 10.99. So a reasonable Jolts job openings number, but it is down still on the prior numbers as well. So a definite decline, but it's from a very, very high benchmark, after the cash surplus of the COVID era. We were up at 11 plus million. It's dropped down to 10.7, but in historical context, that is still a very, very big number of job openings. Max, still no trades, interestingly enough. Still not interested in doing any business for me on this drop phase. Yeah, it's been quite quiet, considering he's only done 2 trades today. I think he's taken the rest of the day off. So he's done 2 trades today. He's had a sell trade and it's made $300, did another sell trade, made $1,000, and then just off to the golf course. Off to the golf course! It's a pity we never got the resell up here from Max, because that would have taken his 161, 162 is down to a low price of 159, so that would have been a brilliant trade, but nope. No siree, Bobby-o. Looking at the short term, there was a short term pop here. There was no volume coming in behind the short term pop, so there was no trade. If we took a trade, it would have been on this green red candle here. And that was at a price of 12s. It got up to a high price of 19s. You still would have made 7 ticks. And then scratched out of the deal at that stage, The ability